We are living in a world right now where the wall of demand that's coming at us for electricity because of a lot of the intensive use of artificial intelligence and data centers need and things like that, we're going to have to really think as a world a lot about where is this electricity coming from? And so to me, geothermal and particularly oil field geothermal has got to be a part of that equation.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abax Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets?
Welcome back to our final episode of The Future of Energy on Smarter Markets. I'm Dave Greely, Chief Economist at Abax Technologies. Our guest today is Catherine Flax, President of Private Markets at X Machina Capital Strategies. We'll be discussing transforming today's oil and gas assets and energy market infrastructure to meet the needs of a more sustainable energy future. Hello, Catherine. Welcome to Smarter Markets.
Thank you.
I've been looking forward to having you on this series because at X Machina Capital, you're doing something unique. You're not only investing in the future of energy, but you're investing in transforming current oil and gas assets for a more sustainable future. And at a time when many investors shy away from oil and gas assets because they believe that they may or should become stranded by the energy transition, you're taking a different approach. I've heard you say you want to be the last owner of an oil and gas asset. So let's start there. Why is that? Why do you want to be the last owner?
I think we've all heard so much about the end of hydrocarbons. I think the reality is that for a whole variety of reasons, which I hopefully will be talking about on this episode, hydrocarbons are going to be with us for a very long time. But we also know that across the United States and across the world, we have declining assets, and we don't want to be left. I certainly don't want to be left in a world that is littered with Superfund sites. And so then the question is, with all of this pretty substantially polluted real estate, what next? I love no-brainer problems. And to me, this is a pretty straightforward one of how do you optimize an asset that exists today and turn it into something great for tomorrow?
And I know part of your approach at XMC, you refer to it as full spectrum energy investment. Could you describe that investment philosophy and approach you're taking there? Because I think it is different.
It is different. And I think that what we've observed is we still live in a very siloed world when it comes to thinking about energy needs and managing energy assets. And so we kind of have one foot in the sort of old world of let's just run our oil and gas assets as we've done. And then there's a whole new world of people who are, let's do hydrogen, let's do the future, let's do all this kind of next step things. I love it both, but the reality is that as a world, we are in the middle of all of that. So we've designed a company to basically bridge from today to tomorrow. But when you think about environmental issues in particular, my view is that our first line of defense is managing our existing hydrocarbon assets as prudently as possible. If you stop the spills, if you stop the leaks, if you really optimize for what you have today, that's the first step in making things as clean as possible. Then there's the whole sort of march to tomorrow. So the full spectrum is really taking it from exactly where we are today, being smart about making the investments, managing them well, and then developing them further to be able to bring them into the future.
And I wanted to ask you about that bridge, because I think that's so intriguing and interesting, because as you said, there's many people doing great work on developing new energy sources for the future, many people doing great work running existing energy assets, oil and gas assets, but you're trying to actually build the bridge for that transition. And I'm curious, I imagine that's required you to do a lot of work on building, other companies that you'd have the capabilities to be able to repurpose and otherwise clean up these assets.
Absolutely. And it actually starts with the traditional assets, building a team of people who are top-notch really experienced in managing hydrocarbon assets, but who also understands that this is the beginning of the end. And so psychologically, having a team of people that totally get this whole thing is not that straightforward because a lot of people are sort of dug in on one side or the other. I think that we've been super fortunate to have just a tremendously gifted team of people who want to be in that bridge. But to your point, we've had to build the companies that do the bridging and that actually take something and turn it into something else. It's definitely been part of the fun at XMC for sure, and definitely part of the challenge.
And could you walk us through some of those companies? I know we had Talal Debs on, one of your partners at XMC.
Sure.
Talking about the work being done at Zafiro Methane. I was wondering if you just walk us through so people kind of understand what it takes to bridge this divide.
Definitely shout out to Talal. He is the visionary on the team. He is the founder of Zafiro, which is our well-plugging methane abatement carbon credit generating company. And again, the idea is pretty straightforward. We've got millions of orphaned and abandoned wells in the United States and then around the world beyond that, but millions just here that are frankly in our neighborhoods. And it's interesting because there can be a lot of debate and discussion and sort of angst around carbon, but there's really no angst around, is it bad to breathe in methane? It's poison. You die. There's nothing good about it. No plants are consuming methane. It's just a bad thing. Zafiro's business is plugging the wells, measuring the methane, issuing carbon credits. Again, a no-brainer thing. I'm all about the no-brainers. I love that so much. So we've got 130 people out there plugging wells, and we'll have a lot more, plugging hundreds and hundreds and eventually thousands of these wells. So that was sort of our first company. And again, that we use in our own assets as well. So we're kind of eating our own cooking in all of these things, which is super important, but also doing it for other companies too. The second company is Gradient Geothermal. I love Gradient. We actually met the legacy team, which was a company called Transitional Energy, a couple of years ago, because we were looking at the acquisition of an asset. We'll talk later a little bit about how we think about acquiring assets, but this particular asset had a lot of hot water, which, as you know, is generally a bad thing for an oil field. And I was talking to Talal about it, and he's a physicist by training, and he was like, this isn't bad. This is good. And I'm like, of course it's bad. Like, not being a physicist, started Googling hot water oil field. What do you do with this? And Transitional Energy came. I got to know the team over there, made a little investment, made a bigger investment. Eventually, we acquired them, and it became Gradient Geothermal. The idea is all over the country and all over the world, we have oil fields and gas fields that have hot oil, hot water, hot gases that are coming out, naturally occurring all over the world. These are being cooled so that all of those things can go into pipes or be repurposed or whatever it is. And Gradient's simple idea is when you're chilling all those fluids, turn it into electricity. I love that. Nothing like turning a waste product into some valuable asset. That excites me anyway. When we first met them, they had one installation that was a DOE-funded project in Nevada. We now have a fully commercial installation in North Dakota. We've got installations not just in the US now, but around the globe.
It's great how you're thinking about taking things that other people might think as problems and finding profitable uses to put them to. I'm curious also, though, how important are carbon markets to being able to make this approach to investing profitable?
I think that carbon markets are important and very, very helpful. As we talked about in Zafiro, a big part of the business there is leveraging carbon markets. It's definitely a way of making the whole project more lucrative. Having said that, I think that I also really like to make sure that no business that I have is completely dependent on any sort of regulatory requirement or anything like that, because you just never know. We saw this with some of the biofuels years ago where regulation is one way and people make investments and then the regulation turns and all of a sudden they're not lucrative anymore. So it's very important to me that we're sort of regulation proof. But of course, now the voluntary markets are stronger than they had been for a long time. And I think with a lot of board decisions and shareholder actions and things like that, we're going to continue to see strength in the voluntary carbon markets. And so that's super helpful for the work that's going on at Zafiro, but it'll also be helpful for the work that goes on at Gradient. It'll be helpful with some of the other projects that we have in the queue right now for kind of the next things. And I think it's important. It's a wonderful, wonderful way for companies to be able to materially reduce the carbon footprint that they have in other ways. Sometimes there's weirdness in the market around is carbon credits just sort of paying somebody to pollute or whatever. But the reality of the situation is that there are some times where it actually is really difficult to reduce what you're doing to allows your business to continue to function. But if you can reduce something over there, it's still net a benefit. And that's what we're seeing.
And I'll understand that you probably can't go into any details about the next things. But I did want to ask you a little bit about your investment process relative to that, because you're finding things that aren't the first things that spring to mind, or capping existing oil and gas wells, using wells for geothermal and power generation. How do you find these next projects that are going to be in the pipeline?
There's sort of two angles there. One is looking at traditional energy assets and how we select those and what are we looking for. We're not necessarily always looking for like the sexiest assets that maybe are the ones where you have a lot of people piling on of like, I want something in the Permian or whatever it is. For us, because we're looking at more kind of end of life assets, we're maybe looking for less loved assets. That also gives us an opportunity to manage them well as hydrocarbon assets, maybe differently, getting a little bit more out of them from a profitability perspective. So that's sort of one part of it. And the other part of it is, could that asset be? And that's where some of the thought process begins on what else. And so that's going back to the example about gradient. I mean, that was a real problem at that oil field. There's all this hot water that stinks. What can we do? So we do actually look at the assets themselves and say, like, what would I want to do with this asset? And then not being a scientist, it's super helpful to continue to just have lots of conversations with people about what are people thinking about doing and trying to do. And of course, the world is filled with interesting people trying to do interesting things. And so keeping our finger on those pulses as much as we can do and be able to incorporate that in the feedback loop is really important. So it's both from the asset perspective and then just from the discovery of what people are actually doing and where's the marriage.
Yeah, and I was curious, in terms of your own team, where do you find those people? Talked a bit like Talal. It takes a certain type of mindset and experience to know to look at things like this and then to know, oh, we could actually do something quite useful with them. So I'm curious, how do you go about building that team?
Sure. And, it's funny. One of my personal passions is around human development. And I think that it's a great joy for me to lead teams and things like that. But I do feel like trying to find people that, first of all, think differently, like I was talking about earlier, around people who are deep in the energy patch or of traditional energy, but yet who still have this idea that this is not the end state. And so how do we think differently? So for instance, some of the very, very experienced engineers that we have working with us on the asset side of things, and we're talking about people who worked for decades at places like Exxon and stuff like that. But these are people who want to be part of how the future unfolds. Sometimes it feels a little like a needle in a haystack, but also sometimes it feels like dating, where you just, again, you have to kiss a lot of frogs. And then you meet people who have that sort of like-minded idea. And then you want like-minded on one hand, and you want a lot of diversity of thought in the other hand to be able to bring in the new ideas. I think we have a really nice mixture of scientists and really, really technical people, but also kind of connectors, innovators. So I think it takes all kinds to get together in a room. And then the fun part is making that a nice blend rather than a mishmash. And I feel like that's a fun part of people management. But I would also add that I think that there's another aspect of human development that I think is really important in the whole energy transformation space. And that is because we're coming to, whether it's 20 years from now or 50 years from now or whenever it is, the end of the life of our hydrocarbon world, we have a lot of people who work in that space. And finding ways of leveraging the talents and abilities that they have. And this is, again, down to people working in the field as well as up the chain. But it feels a little bit like kind of the end of the horse and buggy and the moving into the car situation, and wanting very much to not leave the horse and buggy people hanging and to be able to bring them along into the car world. And so this is a big focus of ours, particularly in places like Zafiro, where we do have rigs, we have people on the rigs, and how can we take folks that may otherwise find themselves on the short end of the stick and be able to kind of repurpose those skill sets into somebody new. And for me, that's a really big and important part of the whole ESG landscape.
Absolutely. And I wanted to ask you about another piece of the ESG landscape that I alluded to earlier, which is that many investors don't want to invest in these types of assets at this point because of those types of concerns. And I imagine you need to raise funds so that you can invest in these projects. So I'm curious, what are those conversations like? And what are the questions and the reactions when you're talking to investors yourself?
I don't want to overuse the dating analogy. As a happily married woman, I haven't dated in a long time, but still, analogy seems to be alive here. I think it's a lot of finding the right fit. Every investor isn't going to be the right investor for us, but also we've structured our portfolio in such a way where if people get what we're about with really the transformation, and there's a lot of people who really love that, they get it, then we can let them, participate in that. But we also enable people who want just the piece. If somebody is like, I don't want any exposure to hydrocarbons, I just want the oil field geothermal, I just want Zafiro. Or on the other side, we actually have people too who are just like, no, I just really want the exposure to the hydrocarbons. We can make that happen for them too. So we can serve it up as a menu, but we think the power is in the combined.
That's great. Also wanted to ask you alluded a little bit to the two big companies, but I'm curious, what areas are you focused on right now?
In addition to kind of more of the same and just doing it bigger and all of that, which is definitely a focus right now, within each of our, let's call it verticals that we currently have, there's a lot of work being done on finding that next technology, whether it's a new way of plugging a well that's cheaper, better, cleaner, whether it's ways of increasing efficiency on the geothermal technology. Part of it is continuing to find that next company and build out the toolkit, as we call it. But it's also going deeper and really finding ways to maximize what we already have, which is very important to us.
And I wanted to dig in a little bit more with the work you're doing at Gradient on oil field geothermal. That's pretty interesting. What's special about that? Because it seems like it would have a lot of applications with everything needing to be more electrified and we need a lot more power.
100%. And I am a power nerd by training. This is something that gets me very excited when there is baseload power that is clean and distributed. To me, that's like ticks all the boxes of what the world needs right now. And then the cool thing is that, obviously geothermal electricity has been around forever, but historically, a lot of the challenges with geothermal have been that you're doing a tremendous amount of drilling. It's very expensive. The lead time to going from the beginning of the project to the end can be 5-7 years. It's a big project. The cool thing about oil field geothermal is exactly on day one how much water is there and how hot is it. And within 2 weeks, you can have an installation on site generating electricity. So it completely changes the risk dynamic on all of this, which to me, it's just the coolest thing. I find it very, very exciting. And we are living in a world right now where the wall of demand that's coming at us for electricity because of a lot of the intensive use of artificial intelligence and data centers need and things like that, we're going to have to really think as a world a lot about where is this electricity coming from? And so to me, geothermal and particularly oil field geothermal has got to be a part of that equation.
Yeah, it's really fascinating, those aspects you bring up about it, that it's base load and it's also distributed. How regionally available are these oil wells to have these types of installations?
We have a great slide on that, which I love because it shows that if you look at the United States, the traditional supercritical geothermal is basically out west because there's real geology that underpins where does this actually work. If you look at, again, just in the United States, where oil field geothermal is applicable, it's so much broader, partly because of the temperatures don't need to be quite as hot for what our technology is. And then also you want to go where the wells are already drilled. We have millions in this country. So the footprint is far, far larger in oil field geothermal than it is in traditional. Then when you look around the world, it's tremendous. It's a quality problem to have, but on the Gradient team, they're not really in a position to do any outbound business development at this point because the inbound has become so significant. It just speaks to the fact that there are so many places around the world where people are like, well, wait a minute, I have hot water coming out of my oil field. This seems like a no-brainer.
Yeah, it does. And it seems very straightforward, right? Like I would imagine the hardest part of the installation is drilling the well, and that's already occurred. I was curious on a very rough cost basis, like is this competitive with solar, wind, some of the other things people think about?
Among the long list of things that I love about this, in most cases at the oil field, they're renting chillers to chill their fluids. So you can swap out an existing chiller with the geothermal installation we do have proprietary technology that actually makes that all happen. In any case, it's not more expensive than the existing chillers. And oh, by the way, there's electricity being generated. It's actually cost wildly effective.
Yeah, instead of taking waste heat and having to deal with it, you're using it to create power.
Exactly.
And you did mention earlier that you're a power nerd, but of course, much more than that. You did start off, as you said, in power origination earlier in your career, but went on to build a truly distinguished career in commodities that included serving as CEO for commodities, foreign exchange, and emerging markets at BNP Paribas, and serving as chief marketing officer globally, as well as CEO for commodities in Europe, Middle East, and Africa at JP Morgan. And now at XMC Strategies, you're investing to transform existing energy assets for a sustainable future. But I also wanted to ask you, given your experience, how do you think we also should be transforming our financial and market infrastructure and technology to support that transition? Because a lot of that infrastructure, the financial institutions, the instruments we have, ways of doing business have kind of been built up around our existing energy system. And do they need to change, or is that a transferable set of processes and skill sets?
Well, I think they do need to change. And I think the good news is that they are changing. You've certainly been in these markets as long as I have, but so much of what happened historically in the traded commodity markets was based on asymmetric information. I think that because of how technology has evolved, we have an opportunity to create a level of transparency that can really create a lot of efficiencies in this world. And that's helpful for everybody. It's helpful for access. It's helpful for costs. And so I think that it's beginning to happen, but I think it's only just at the beginning. And then I think that part of that too is that because of the technological limitations historically, things like new types of contracts were really cumbersome to get in place. But because now we have a lot more tools that we can leverage, we can match much better the risk profiles that people are taking when they're in their businesses to the risk management tools. And of course, I'm involved with ABAX, you're involved with ABAX. We know that that's a huge part of why it was so important for ABAX Exchange to happen, was because it creates a level of transparency and it creates risk management tools that simply haven't existed. And that's really important if we're going to be effective in energy transformation in this world and bring people forward. We can't have these gross inefficiencies in the market that are also biasing one group against another. So I'm really excited about how this is building because I do think it's just better for everybody.
And I know we're very fortunate that you're deeply involved in ABAX as well. And I wanted to ask you, because you mentioned that one of your passions is developing people. And that's something you've done throughout your career. Now you, in addition to your work at XMC, you serve on many boards, including Amperon, ABAX, and Base Carbon. I wanted to ask you, what draws you to serve on the boards of these new companies? And what do you see in them that makes you want to give of your time and experience?
The theme, I would say, in my for-profit boards is all the intersection of technology and commodities. It occurred to me, maybe a bit of a late bloomer, but probably sometime around 2014 or something, that the entire world of commodities was going to be upended through technological transformation. And if I didn't get smart about what that was going to look like, then I was going to kind of miss the boat. And so I tried to do, to the best of my abilities, as much of a deep dive as possible on things like blockchain, things like artificial intelligence, and what are those things and how does it change the work that we're doing? And so that sent me in a number of different directions, but including sitting on all the boards that you mentioned, because I think in each of their own way, each of those companies are doing things that I think are materially moving the ball down the field on how technology is improving commodities.
This might be a little bit of a tangent, but I wanted to ask you, because I know you're involved in one of the early companies using AI in finance. And now, of course, it's become so into the mainstream over the past year. So I was just curious, what do you make of, given your prior experience, where we're at now with the use of this new technology?
I do think that we still have a ways to go. I think that we're still very much at the beginning, but I think that when you consider how the world can benefit from vastly improved decision-making, vastly improved data quality and assurance. There's so many things that just in our day-to-day lives, and we forget about commodities, but when you think about things like medicine and education, all the transformation, and I think we're just at the beginning of all of that, but it's very exciting to see the ability to put resources in the hands of many, many more people than would have otherwise been able to get, let's say, quality education or quality medical care or whatever it is. So I think we're on the optimistic side. There's so many breakthroughs that we can see now that are looming on the horizon. I will say that with all good things come risk. And I think that the conclusion that I've drawn over the years around artificial intelligence and things like blockchain and stuff like that is they're morally neutral. It just depends on what you do with them. And so I think that it's up to us to make sure that they're used in ways that are actually enhancing the world and not doing nefarious things. And that potential exists as well. So I think that's on us. And then, of course, the other part of it is no matter what, no matter if it's used for good or for evil, it all takes a lot more electricity. So that to me is like thematically consistent with figure out where all that electricity is coming from.
We got to figure out where that's coming from. We got to figure out where we're going. And I wanted to ask you, you've talked about a lot of this already, so I don't know if it's a summary, but successful investing always requires insight, seeing what others don't, but will in time. I just wanted to ask you as we wrap up, what do you see as essential to investing for the future of energy that many others may not be seeing yet?
It kind of boils down to maybe three things. One is we may think we want this kind of energy, but not that kind of energy, whatever is in those buckets for anybody, but we're going to probably need all of the above. And so the question is, how do we effectively, cleanly, to the extent possible, do all of the above? I think the second part is that this may be controversial, but my view is that there is no such thing as green energy. There is no clean energy. There's various shades of unclean in energy, but if your solar panels are going to end up in a landfill, or if your batteries require lithium mining, I hate to say it, but that's not clean. And so the question is, what are the trade-offs that we're making? And so looking at energy choices in terms of the actual impact that they're having and in terms of the trade-offs and the choices that we're making, I think requires a little bit of dispassionate analysis and just being honest with ourselves about all of that. If you're keeping a coal plant open to manufacture electric vehicles, then you've got to be honest with yourself about that. And not necessarily bad, it's just true. And again, I think the final thing is going back to intermittency. I think, we have to be honest with ourselves too, that a lot of power generation that is clean today, clean, quote unquote, is intermittent. And we don't run the world solely on intermittent generation. So baseload power, which again is exciting about gradient, but there's a lot, whether it's nuclear or something else, like we're going to have to lean into sources of baseload power that may be a new way of thinking about things.
Thanks, Catherine. That was fantastic.
Thank you. It was such a pleasure.
Thanks again to Catherine Flax, President of Private Markets at X Machina Capital Strategies. We hope you enjoyed the episode. This concludes our series on the future of energy. We'll be back next week with our new podcast series, Summer Playlist 2024. We hope you'll join us.
This episode was brought to you in part by Abax Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets? Contact us at onboarding@abax.exchange. That concludes this week's episode of Smarter Markets by Abax. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abax Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.